You've travelled the world. You've been around the world 100 different times. I think you said the other night at the presentation we went to. The world's going global. Tell us a little bit about what your thoughts are. 10 years ago, property was very much a case of I lived in Phoenix, I bought a house in Phoenix. I lived in Johannesburg, I bought a house in Johannesburg. And with the advent of the internet and access to information and cheap flights and all that sort of stuff, it's going global. The bottom line is people are interested in returns in different areas. You can get a far better, possibly a far better deal here, better yield, etc. So now suddenly, well, should I invest in Joburg? Should I invest here? Well, it actually comes down to the numbers.
It does come down to the numbers. If you live in Joburg, I would say get your first investment property in Joburg. Probably get your second one there. You've got to cut your teeth on it, you've got to learn the ropes, you've got to learn what it takes to be a good investor. But if you've got 10 properties in Joburg and you're looking at buying an 11th, I for one would say don't buy it in Joburg. Buy it in Cape Town, go to Port Elizabeth, go to Durban, go to anywhere else. And once you've got a few more, I would even say it's time to think about going global. And you South Africans know the answer to this better than most nationals of any country because you've suffered from the ravages of what can happen to the rand. And I'm from New Zealand originally, we had it there too. We had exchange rate controls. If you left the country, it might still be the law. If you left the country for more than 13 weeks, they stopped your social security payments and your pension and stuff because they didn't want anyone, heaven forbid, to spend their New Zealand dollars overseas. So you need to spread your risk a bit, and if you're going to spread your risk, why put it into a market where the currency is going down, where the population's in decline, and where there's no growth? You are far better off investing in places where there is great growth. And I always say it is so easy to beat the average. The average growth rate long term in this country for real estate is about 9.7%. But don't settle for 9.7, that's the average. That includes little cities that have shut down because they used to have a steel plant or a coal mining plant and they've shut down. They might have negative growth, so the 9.7 is the average. That means there are other places that have high growth. That's why, as we said before today, if you invest in Las Vegas or Phoenix, you will beat the national average by a wide margin just by picking those cities. So let's say we're talking about Phoenix. You don't even have to pick a house at random here because there are suburbs that for decades have grown at faster than the average rate and other suburbs that grow at less than the average rate, and these stats are easy to come by. You compare that to stocks or shares or whatever you call them. It's very hard to pick something, a market sector that has higher than average growth. They used to say it was the technology stocks and then we had the technology crash, and then they said it was bio whatever and then that crashed. It's very hard to pick, and it doesn't tend to have those trends for a long term, but real estate trends stick around for a long time. So yes, invest overseas to hedge your bets, and if you're going to invest overseas, why not pick a fast growing market like Phoenix or Las Vegas?